Hello, this is Francesca Lagerberg from Grant Thornton, and I'm now going to look at real-time information, RTI, which is one of these new initiatives being brought in by HMRC that is causing quite a lot of discussion at the moment, both from those who are about to enter into it for the first time and those who are looking ahead as to what it really means. This is of real importance to anyone who's an employer of any size or of any type of business, because they're going to have to use RTI at the very latest by October 2013. You'll see in the notes I've included an article by my colleagues Ellie Gamble and Sharon Giltz, and also some practical information from Karen Thompson, who belongs to the Chartered Institute of Payroll Professionals. This was an article that ran in Taxation back in August. Let's remind you about what RTI is all about. The reason it's coming in is HMRC wants to improve the way it runs PAYE and all the related processing around it. So by October 2013, all employers will be required to report to HMRC on or before every occasion that an employee is paid, i.e. in real time, not at the end of the year, not at various stages in the year, but in real time. Conceptually, that sounds like a doddle. The reality is it's causing quite a lot of concern. It's a pretty fundamental change. Employers are going to have to report details of the amounts paid to employees and the matching PAYE deductions at the time it actually happens. Gosh, that's a bit of a change. Because under the present PAYE system, we've all got pretty comfortable with employees' pay being sorted out within 6 weeks of the end of the tax year. Often we put aside information until that time, and often reconciliations and information isn't guarded until then. HMRC has noted that this process that's currently in place gives rise to about 5.1 million reconciliations needed each year to get the information right. Clearly that causes both under and overpayments. And the idea now is that HMRC will be able to know the right tax due, the NIC due at the right time, and no employee will lose out because the right amount will be taken every time. Sounds absolutely simple. Of course, it isn't. RTI is intended to be helpful, and it will improve debt collection and it will improve cash flow. It will deliver cost savings to HMRC, of course, because a lot of these reconciliations will no longer be needed, a lot of admin will be lost, and a lot of man hours will be not needed anymore as well. It probably will also save some time ultimately for employers. HMRC argue that could be as much as 300 million overall by the end of 2014-15. But inevitably there are some transitional costs, not least new software, which needs to be RTI compliant, and also of course training. Many members of staff who do payroll related functions are going to have to do some work to make sure that everything's up to speed for when RTI comes in. HMRC are very bullish about this particular project. They've been running pilots now since April 2012. They've got some very large employers already doing RTI, and by the end of September 2012 they're going to have about 1,300 pilot employees going live using this RTI process. The first submission under RTI will have to contain some extra information about each employee and each pensioner, so that does mean there's going to be quite a lot of activity needed just to make sure the payroll's capable of delivering. So what needs to happen? Well, to start off with, a lot of this is based around the software. Have you got the right integrated software to make RTI work? Every time an employer makes a payment to an employee, the payroll software should automatically gather the information about the employee's income, tax, NI, etc., and be able to send this info to HMRC at the same time that the payment is made. Now, there's going to be quite a few employers who haven't got that software or don't have access to online filing, and a tiny number who've got ethical objections to using computers. That very small number will be allowed to carry on using paper. Nobody else will have that right. Most employers already file online, and the push is to make sure that just about everybody else does. There's two main changes to payroll. First of all, employers are going to be having to submit returns under RTI on a regular basis. The information needed needs to be really accurate. That means right names, right NI numbers, right dates of birth. Everything about the information must be up to date, and that, ironically, has proved to be the most difficult part of RTI. Many people are entered onto payroll under dummy names because that was just easier. Shove the name on, sort it all out later, and the sorting out never happened. The numbers of employers who employ deduct and MLs are actually quite large. Lots of NI numbers are wrong. They've been shoved on at some stage, but again, not properly improved. Some of the information is just incorrect. People have married, changed their name, rechanged their name, and none of that's been updated. All that stuff has to happen, and that in itself is probably the biggest cost. Because if your information is inaccurate, it won't be able to satisfy the RTI requirements. So what actually needs to happen? Well, if you as somebody whose clients haven't yet got RTI in their minds, they really need to start thinking about it quickly. Large employers are expected to be on RTI very, very shortly. And as I said, by October 2013, every size of employer needs to come online. Even the person who all they're doing is employing a nanny or a gardener or somebody who is a personal member of staff, they're all going to need to use RTI. You'll see in the notes the Chartered Institute of Payroll Professionals have given some useful insight into what it was like for them actually operating RTI. There's a diary there of the actions they took, and you'll see that immediately their main issue was around making sure their data was correct. Full names, dates of birth, national insurance numbers, making sure the software was right. The best advice I can probably give you at the moment is to make sure you get yourself up to speed quickly. There's lots of RTI courses being run around the country. Get yourself onto one of those if you think it's going to give you some information to enable you to talk to your clients more effectively. For all employers, they need to get employee data as accurate as possible and make sure their software is up to date and able to deal with RTI. They may also need to think about their back supplier. Are they able to operate the RTI in the way it needs to happen? Temporary national insurance numbers or default date of births simply won't work under RTI. They have to be changed and have to be made accurate. Processing dates need to match the employee payment dates. Again, that's something that doesn't always happen. For employers, there may be a whole raft of little niggling issues that in themselves aren't much, but together make this quite a significant project. Also, you need to think about how you process advances, how that applies with PAYE regulations. And, of course, you've got to be able to submit a full payment summary on or before the date that an employee is paid. How can an organisation be absolutely sure that they can comply with that? As mentioned in your notes, there's some pretty difficult areas too. Casual workers tend to be rather awkward here. Have you got the right information? Are they people who are around long enough to get the right information from? And what happens if the data isn't available? Domestic staff bring a whole range of different issues. I think many people who employ a nanny or an au pair are going to have to, for the first time perhaps, get themselves some decent software that enables them to do this job, because RTI, without that, is going to be very hard indeed. Businesses where trunks are operated could also find themselves having some difficult issues simply because they have to make sure that the payments are linked up with the RTI deadlines. And anything involving an advance of earnings has also got a range of complications around it. So the ultimate message is, don't let RTI come before your clients are ready. Do make sure they're aware that this is coming along, particularly as the timescales now are very tight, and they are going to need to spend quite a bit of time just working out their plan for how they're going to meet their RTI obligations, because if they don't meet them, they're going to find in a very short period of time they're facing penalties and interest and quite a lot of money for not getting their payroll right. Thanks very much for listening.